Very good afternoon to every single person who has connected to this webinar. On behalf of the CAF, as Secretary of the Latin American and Caribbean Initiative for Carbon Markets, we welcome you to this webinar, which we have entitled International Markets for Carbon Credit Offer Demand and Mechanisms for Access. Before starting with some brief introduction, I would like to give you all two practical pieces of advice. First of all, this webinar will be in Spanish and in English, and we have simultaneous interpretation in the corresponding channels. Secondly, during our webinar, you will be able to send all of your questions to the event chat in YouTube or in the social media of CAF. As I said, this is the third webinar out of a cycle that we have dedicated to the voluntary carbon market. The objective of this number of courses is to talk about all of the aspects related to this topic. We have been inviting experts and players from the whole value chain to understand and improve our knowledge regarding aspects about this market. During the first webinar, we dedicated it to an introduction to the carbon market and its potential, both in Latin America as well as in the Caribbean. On the second webinar, we took on the topic of the value chain, the key sectors, as well as its opportunities. On this occasion, during this third webinar, we would like to focus and invite you to deepen your knowledge regarding the trade of these carbon credits. And just to put you briefly into context, I would like to share with you some relevant pieces of data. During 2021, the voluntary carbon market arrived at $2 billion, which quadruples the amount of the market from 2020. This was due to an acceleration of trade for nature-based solutions, as well as higher prices in other projects with social and environmental benefits. Also in 2021, there were approximately 6,000 projects for voluntary projects for compensation, with which we have eliminated or reduced over 1,100 tons of CO2. These voluntary credits are sold mostly in Latin America. It is the second place in the world, all coming from this region, both in 2020 and 2021 on average. But with all of these data, and in spite of its growing challenges, there are still many challenges throughout the region. And that is why today, with this webinar, we would like to delve deeper into some essential uh, pieces of data. For instance, how does the international market work? And mechanisms for access, the offer and the demand also, and some other topics that will be taken on by our speakers. Now, going directly to our speakers, we have divided this webinar into two presentations. The first one will be on the current state of the voluntary carbon markets and its trends. And for that, we have invited the company BMV Global from Brazil, and especially Ms. Mariana Coelho and Mr. Renato Fazzolino, who will share their presentations. Mariana is head of global operations. She has a degree in international uh, trade, and she has worked in trade finance for international consulting, and she is responsible for gathering financing for sustainable economic solutions. Renato is head of relations with investors in BMV Global. He is an accountant, has an MBA. He has broad experience in M&A, mergers and acquisitions. He's a financial planner as well. Today, he heads the activities for relations with investors. And therefore, Mariana, Renato, I invite you to initiate your presentations. Thank you very much. Very well. Thank you all for this kind opportunity. I am Renato. Allow me to share my screen and let me know if everybody can see it. And yes, we can. And well, I would like to start this presentation by telling you that as an accountant by trade, as was said, I am very used to the terms of passive liabilities or assets liabilities, and we talk about compensation of liabilities, where the issuers seek the corresponding liabilities so that they can compensate. But the asset about which Mariana and I will be addressing you today will be this credit of sustainability is an asset that is immersed in the regulatory context as well as in blockchain, as you will see a little bit later. And it is about an asset that quite often brings a much larger volume than all of the liabilities that people are seeking in their compensation. Therefore, they create the true capital, composed by capital. Yes, naturally, this is capital which biodiversity will remunerate, as we will explain a little later. So I would like to allow my colleague Mariana to take the floor so that she can start with a presentation regarding the context of the volunteer carbon market. Mariana, the floor is yours. Thank you very much, Renato. As we can see, here we have some information regarding the regulated market versus the volunteer market. Today, according to the information that we have a market of $899 billion US dollars in the regulated market versus only $2 billion in the volunteer market. Now, we have information in the sense that the mechanisms that stemmed from the Kyoto Protocol are following their challenges for reduction. And now that they have these measures to, to bring them to the market, how to reduce the greenhouse effect gases, we have a very promising market. This initiative here in Brazil, where we are, where BMV operates, is still drawing. We do not yet have a regulated market, but we have something that is called payment for environmental services, which is which is which covers the carbon credits. So then here we have regulations not only bearing in mind the traditional in reduction, but also something that reflects the reality of the wild forests in Latin America, primary forest expression. Now, I would like to call on Renato again for him to tell us a little bit about the worldwide natural capital. Perfect, and thank you very much. So as we were saying, in capital here, we like to expand the concept of the intuitive uh, financial capital to then also talk about natural capital. In the world, the jungles, according to the World Bank, have a size of 39 million square kilometers, out of which Latin America has about 24%. Now, this is exactly the capital that can be remunerated with the product that we will be discussing today. So in order for you to have an idea, not only of the size of this capital, but also of the potential that Latin America has. And of course, talking in terms of financial capital, the ESG is the most known. And according to estimations by calculations by Bloomberg, in 2025, it will be 53 trillion US dollars. And speaking specifically about the debts of sustainability or sustainability bonds, we are talking about $800 billion. Therefore, it is huge capital, both in natural aspect as well as in the financial aspect. But like every good story, we have some challenges, and it is thus very important that we talk about the biocapacity of the planet. And what we see as of today is that for every one person, there is a footprint of 1.2 hectares of carbon, out of which the Earth is only capable of regenerating 1.6 hectares. Now, of course, this is a huge problem, but also in the direction the planet is going, because there are too many people in countries like India who are leaving the lower classes and they are going to the middle classes, which will increase the volume of the use of plastics and the consumption of meat. And this is a point of attention so that we can use this asset as a huge benefit. And then the challenges are not only there, because when we talk about ESG, another term that we know a lot is the greenwashing. And according to some research by Foucault Cloud and Harris Volt, it was interviews with, what was it, 1,500 CEOs around the world. About 60% of them have, have admitted to greenwashing, not only because they don't really have the necessary activities or because it is a new term and therefore it is there for all of you. Furthermore, with the current movement of tokens, to this point about the double accounting, if for instance a landowner that has some land can share in tokens the same land in different platforms, and this has already created problems and some news that have been heard publicly. So it is another point that we say again that we are not properly regulated. So there is still a lot of that in the non-regulated markets. Then, talking about the need for investment for preservation, there is a piece of research from the World Bank that it says that today it is necessary to invest about 2 or 3% of the gross domestic product worldwide. And today it is like at $100 trillion. So it's like $2 or $3 trillion that we need to invest in preservation. But by 2050, this number will grow by probably 20% of this worldwide GDP. Another challenge that we have here is how to monetize these environmental assets, not just monetize, but also control the volatility, which is there throughout all platforms. Now, speaking specifically about public power, there is a challenge for uh, fundraising for public policies in order to protect the forests. And finally, the topic of the regularization of the ownership of land so that the owners can own regular lands that can in turn receive the investments for preservation, for conservation. So we have a large number of challenges. And now I would like to allow Mariana to tell us about the green CPR, which is connected with the UCS. Please, Mariana. Very well. As you can see, this is information from the B3, which is the fifth largest stock exchange in the world. Then in Brazil, to increase, but what is the CPR? It is to increase the liquidity of environmental assets. The government passed a law that created BMV. BMV is a pioneer in issuing green CPRs. It is like a contract to future, which is a commitment of environmental assets. In our case, it is the UCS, the Unit of Credit for Sustainability. It promotes this conservation of biodiversity and voluntary compensation, covering not only the environmental aspect of the operation, but also the social impacts. Furthermore, it fosters the criterion handed down by the government and the standard, bringing the criterion of governance. That is why it can be used as a collateral for financial operations. There are instruments for debt in the form of bonds so that this bond can be financially contended with positive externalities. And everything will depend on the qualification of that asset. In this case of the UCS, it brings all of those benefits. I would like to explain a little bit more about how these are generated beyond the criterions that bring these benefits. We have as, as criterions in order to bring security in the capacity for production of foodstuffs in the region. We have the regulations for land, the specific regional laws, and we have a project which has been accepted through a public hearing. After this, a law is passed, a regional law is passed for the creation of each project. After the generation, we make sure that each asset will be registered in the name of its owners, the owners of the property directly, or the development nuclei. So the BMV is a standard and it is an ecosystem that covers a large part of the KPIs of the green bonuses and their application. I would like to ask Renato to explain a little bit about the ecosystemic services, what they entail. Perfectly. Thank you very much. And well, in terms of the ecosystem services, we are speaking essentially about those services that nature provides us with, hydrological services, oil, sorry, the soil rather, oxygen, plants, and then the human part, the communities that live near those cores, those nuclei that Mariana was mentioning. In total, there are 27 services, which are cataloged and registered in blockchain as a result of a study performed over 15 years ago by BMV in alliance with UNESCO, which is the state university for that type of study, and also with certification by SGS, the Swiss auditing company that I think many of you know. And of course, another alliance with organizations like SEBRAE, which is very relevant here in Brazil, as support for entrepreneurship. We were recently in Egypt for COP27 with SEBRAE, and of course, with support from all of the financial market, which is exactly the differential that we were mentioning a little earlier, in the sense that other solutions do not have this reference in the regulated market. Now, here, very quickly mentioning the process for the creation of the OCS, of the UCS. Everything starts with adhesion of a producer, someone who owns the land. He comes over to BMV to say, I would like to certify my land. So then a team of scientists go to visit the land to catalog and register these 27 services, not only in blockchain, but also with this mirror in the CPR, in the green CPR stock exchange, which is the regulated market. And then at that point, we are ready to issue the tokens of this UCS. And of course, then with a trade that will allow purchasers and people who are selling them to meet, to trade this asset. Now, for everything to be very clear as to how the financial flow operates in UCS, everything starts with a certification of the land of the owner. He receives this from BMV, and here we have the corporations registered, and that is the first part at the bottom left, the UCS registry. At the time an investor or a company wishes to buy or sell these UCSs, the resources are then sent. And those same UCSs can be used as collateral for financing or for debts with financial institutions. Therefore, the money flow reaches the owner of the land with a promise, which is a commitment for 25 years for environmental adequation or preparedness, and of course, with sustainable development. Therefore, it is a solution that does create a critical mass of offer and demand, which, which is close to the regulated market. And it has a solution of guarantee or collateral, of visibility, which are precisely some of the points that are necessary for this market to develop around the world. And here we have a large example, which is very valuable for BMV, which is the case of Starbucks, which recently is we saw in the news, and I will like Mariana to talk about that. Please, Mariana. Well, as you can see, this is from Reuters. We see that we participated in the issuance of sustainable debt by Starbucks. Part of those resources were converted into UCSs together with Banca Votorantim. Banca Votorantim belongs 50% to the Brazilian bank. It is one of the largest banks here. It was issued, they issued a sustainable debt for X millions, 20 million reais. It understood that this not only mitigated the environmental risk of the customer by having a safer loan, but also diversified its charter or portfolio, bringing a trade of impact for their portfolio. The customers got about 50% of the economy and the interest rate, and changing their guarantees or collateral and to compensate their debts. But the huge benefit is for the owners of the land who benefited by the opening of these UCSs because they are insured with the environmental payment law, and that is being used through a product that they are creating. And now we manage to have collateral from these financial instruments. So we have the carbon, but also a full reality of native forests here in Brazil. Renata, could you give us the? Oh, sorry. No, wait. And that is why I would like to show you a video so that you will better understand how the payment of this environmental service would work, how the owners of the land think about this. Yes, give me a second, please. Can you see my screen? Oh, there it is. with all of these explanations, we can see that the demand can come not only from the challenges for reduction, but also from the 2030 challenges, the, the Sustainable Development Goals, and the very reports from the SEC and the others, which bring a broader logic for accountability. And that is why here we have an economic portion plus environmental, social, and with governance. The economic logic, we also need to think about it. And please, Renato, take the floor. Okay, so then for us to conclude, we would like to express our gratitude for this kind opportunity. It means that the time has come to use this green infrastructure that the BMV has developed, transforming knowledge, the action of public power, and economic development as a new definition for ESG. E plus ESG. The first E is economic. Economic, which makes it possible to preserve nature and clearly maintain the CO2 levels, besides the security in foods or food security and income and all of the management for governance, which are very, very important, and paying attention to global pacts and agreements. So thank you also very much. And we are ready to continue this conversation. And again, thank you very much. Very well, Renato, Mariana, thank you so very much for your kind presentations. Most definitely, as you said it at the very beginning, we have a huge capital for opportunities, but we also have some challenges. So beforehand, I would like to leave you with a question so that you can answer at the end of the webinar. It is, what are the challenges of this new e- economic logic that you spoke about? Which way should we go? So think about that. And thank you again for your kind presentation. And thank you very much. So of course. And now, allowing the second portion of this webinar, we would like to speak about the mechanisms for access to carbon markets. And for that purpose, we have invited Mr. David Dorr, Executive Director of Dorr Asset Management. He has a long experience in global capital markets. He was founder of Life Exchange, the first platform for electronic commerce for life insurance. And he also created Doors Management in 2010 to incorporate environmental emerging markets as voluntary compensation for carbon and renewable energy certificates and biodiversity. David, you have been introduced already. We thank you very much for your participation, and you are quite welcome to this webinar.
Thank you very much. Special thanks to the whole team at CAF for inviting us to participate in this important subject. This is an exciting market that has been in development for nearly 20 years, but the last 2 years has really been involved with a lot more broader participation. And I believe one of the things that's exciting for many of the participants that are on this webinar today is that Latin America and the Caribbean have an enormous role to play in carbon markets, not just from being providers to these markets and protecting the incredible nature that we have throughout the Caribbean and throughout Latin America, but also from a leadership perspective. And in order to do that, our role is to help support markets and help guide the direction that they're going to go. So again, a background on us, my career background is as a trader for more than 25 years. And as part of my career, one of the things that I've done is that when new asset classes emerge, we help support the liquidity in those markets. And there's no market that's more important to us than nature itself. And that's why we created our firm back in 2010, is to support the growth of carbon markets and the broader environmental commodity complex. So what I'm going to share with everybody today is a little bit of the background with how those markets have evolved over the last 12 years and over the last 2 years in particular. I'll pull up my screen here for you guys. One moment. Okay. So the first thing to understand is that carbon markets evolved as a financing mechanism. So when carbon offsets are sold, the entire point of that is to provide financing to forestry projects, clean energy projects. It is a tool to move capital from capital markets to the places where it's most needed. Now, for the last decade, the majority of project developers from all over the world, the way that they have been able to monetize the carbon offsets, the carbon credits that they generate, is by entering into long-term offtake agreements, typically with corporate end users, whether those are participants from the oil and gas industry, large producers of emissions, whether that's forward-looking technology companies, Microsoft, Amazon, Apple, that want to be good stewards of the planet. The traditional mechanism has been to enter into long-term contracts. Now, this was necessary because in the last couple of years prior to that, there was not an ample marketplace where project developers could go and get transparency and find liquidity for their projects. What you see today is a market that is effectively broken into two pieces. You have a plethora of exchanges, so a multitude of carbon credit exchanges are developing, and the number of institutional participants are also growing throughout the market. So every major investment bank around the world has a team dedicated to financing carbon projects, dedicated to trading carbon credits, and those are called over-the-counter trading desks. So it's very important to drive home this point, because when we talk about how to access the market, this is one of the most interesting aspects of how the market is evolving, because the majority of the market is now evolving quickly from the institutional perspective. And what's incumbent upon everybody in the market is to bridge this gap so that there's broader participation and broader inclusion in carbon markets. So an OTC trading desk, OTC means over the counter. And that is when a transaction is privately negotiated. That might be between a project developer and a trader, a firm like ourselves, or a bank, or anybody else. And then when that carbon credit trades again, it is also privately negotiated transaction by transaction. 95% of carbon trades today are done over the counter. Now, recently in the last 2 years, there's been numerous exchanges that are starting to pop up. As BMV was presenting, we're seeing exchanges that are addressing the tremendous need for liquidity and transparency in exchange mechanisms, whether that is for spot markets or whether that is for futures contracts. Those have tremendous need. However, that's only 5% of the market. So it's important when we think about how participants access the market, we need to lower those barriers. Exchanges lower those barriers and give better transparency. OTC transactions are traditionally large transactions. They take place privately, and there's very little to zero transparency in those markets. This is what you can see right here. This gives you an idea of the volume. Now, the other piece here too, when we talk about exchanges and other entry points, there's also been a trend towards hosting auctions. So a different mechanism, sometimes these auctions are actually hosted by exchanges, sometimes they're hosted by private companies, and sometimes they're hosted by governments. So we've seen a tendency towards auction processes where participants will auction off a block of credits. So you'll see here, there was an auction recently in Singapore for 250,000 blue carbon credits. Saudi Arabia's, their Saudi Public Investment Fund, underneath their sovereign wealth fund, helped auction off 1.4 million Corsia compliant carbon credits. And EPM in Colombia, the largest utility provider there, also auctioned off 2 million hydroelectric carbon credits last year. So we expect that we will see more of these types of market mechanisms for participants to come to. Whether an auction is the right process, or whether an exchange, or whether OTC, it depends on the participant. But the more mechanisms that we have, the more transparency we're going to see coming to this market. Now, it's important to understand the risks that are out there. For new participants or even existing participants, it's critical that we analyze what are the risks from one type of market mechanism to another. In OTC markets, one of the largest risks is that you have to face a counterparty. Unlike an exchange, where an exchange is the counterparty to every participant, In an over-the-counter transaction, it's necessary to negotiate privately and to take the risk of that counterparty. You could imagine the types of issues that could take place. If a seller of carbon credits, let's say a project developer, sells their carbon credits and they transfer those to the buyer and the buyer fails to pay, then the seller is at tremendous risk. It could also happen the other way around. A buyer could pay for a block of carbon credits, and if that seller does not deliver those carbon credits, then the buyer is out of their money. These are very, very real risks. These transaction failures, as we label them in the market, happen all the time. And if we want to see a market that scales with integrity, it's important that we put better market mechanism pieces in place so that those transactions don't fail. And again, this talks about some of the other issues. Another challenge is the lack of transparency. So as I mentioned, OTC markets don't have a central reporting database. So unlike an exchange where every transaction is recorded and published, or at least there's data that can be subscribed to, in over-the-counter markets, that is not the case. And so with such a large volume of transactions trading over the counter, it's very difficult to know the accurate numbers for volume. We often have to turn to data in the registries to see how many credits have been issued and retired in any given year, but it makes it difficult for tracking services like ecosystem marketplaces and others to have a clear view as to what's actually taking place in the market. Another issue, as markets mature, one sign of the health of a good market is when the bid-ask spread starts to narrow. So in all capital markets, whether we're trading gold, you're trading oil, or you're trading carbon credits, one of the pieces that you're always looking at is what is the difference between the bid and the ask. As those prices start to come together tighter and tighter, that is a sign of a healthy and more liquid market. Right now, it's not uncommon to see bid-ask spreads as wide as $2. Even some of the exchanges themselves have shown bid-ask spreads as wide as $4 or $5. Now, for perspective, let's say that we're talking about a high-quality nature-based credit that's trading in the range of $14 to $15. If there is a difference of $4 to $5 between the bid price and the ask price, that's nearly 33% of the actual value of the carbon credit. So that is a real barrier to the industry being able to scale. So we see regulated markets, as was referenced in the first presentation. Regulated markets in Europe are more than 200 billion annually. And the voluntary market now surpassing 2 billion and on its way to grow, it's going to need to get past those types of issues where the bid-ask spreads start to narrow. So this is a big piece here. The other piece that goes along with that is having a global set of reference prices. And this is something that we feel is very, very, very important to the industry. This is a project that we're working on ourselves. We hope that others are working on it in the space, is that pricing should not be siloed away as separate data. It should not be data that you have to pay for. And we'll use an example here that I think everybody will relate to. When you look at foreign exchange prices, whether that's going to an airport or you're trading foreign exchange in large size with a big global bank, you never have to pay to know what the exchange rate is. You pay when you make the exchange. You do not pay to know what the exchange rate is. And again, just thinking about entering an airport, imagine that you go to a currency exchange counter and you have to pay them first to see what the exchange rate is before you then decide whether or not you want to accept it. That would not be a very healthy process. Those kiosks would not be very successful. Unfortunately, what's taking place in carbon credit markets right now is that the few sources that do have data, they charge for that data. And very often that data is expensive. It's not accessible to project developers, let alone the trend towards smaller project developers. And it makes it difficult for everybody to know what is the correct fair market value of prices. So this is one of the issues. This is a key point for the industry. We need transparent reference prices, and we need those prices to be free and published publicly for everyone. And we do believe that this is coming. We expect to see changes in this aspect of the market over the next 12 to 18 months. An interesting component with the mechanisms and the tools that you'll find in carbon credit markets, and this is a very interesting development, is that there's been the introduction of rating agencies. And this is a concept for anybody that has traded fixed income or bonds worldwide. Credit ratings is a very well-known tool. Fitch, S&P, Moody's, these are companies that rate sovereign debt, corporate debt, and it helps give you an idea of the investment quality of what you're purchasing. So this is a novel idea that's now been introduced to the carbon credit market and is gaining some traction. So there's various rating agencies out there. The challenge is that they use different methodologies. So again, this is a good adaptation, but like all markets, we believe that the methodologies will get more and more transparent and they will become similar in the quality of their processes. But the idea behind having a rating on a carbon credit is to give the purchaser and the seller a better idea of the quality of that credit. Has that project had a separate independent review? Is it meeting its baseline requirements? Is it really avoiding or removing the expected number of carbon dioxide amount from the atmosphere? The rating agencies help improve that. And with data from satellites, this information is only going to become easier and easier to provide. So we're glad to see this happen. We think that there's some roadblocks right now, but those things are improving rapidly and will help as a mechanism for everybody. The other issue too, this is something that we feel very strongly about from a market participant perspective and as traders in the marketplace. There's a huge issue taking place right now with carbon markets, that carbon markets need to decide whether or not the carbon markets want to grow and take the path of public equities, or if they want to grow and take the path of commodities. And this is something that probably none of you on this webinar have heard prior, but I want to put this on everybody's radar as a vitally important issue. So what do I mean by the markets need to pick a path? Is the path going to be equities or is the path going to be commodities? If we talk about public equities, we'll use examples that are familiar to everybody. That could be a company like Petrobras. That could be a company like Ecopetrol, Apple, Microsoft, Amazon, Tesla, all public companies that we're all familiar with. When a company is public, there's transparency, there's auditors, you have all these tools that you expect, but no two public companies are the same. Apple is very different than Google, even though they're in similar sectors, and Google's very different than Microsoft. Each one of these companies, to take an investment decision when you are investing in a public company, requires individual deep level analysis of each one of those companies. Now, why do I use this example? Because this is what's starting to happen in carbon credit markets, where there is becoming an obsession with underwriting every single nuance of every individual project. And you're going to understand in a moment why we feel that that's problematic for the growth of the industry and for improving participation. The other model is commodity. So originally carbon markets were designed to be a commodity, and a commodity, exactly as the word implies, it implies that there is commonality. So whether we're trading coffee, whether we're trading orange juice, whatever that commodity may be, it might have some nuances in the quality, but it's effectively the same. And this is important because when we commoditize an asset class, that commonality helps attract liquidity to it. Those commonality points make it easier for participants all around the world, not just in a local market, but in a much needed, urgent international market. It makes it easier for them to participate. So the problem that we have, returning to carbon markets here, is they need to choose. Do they want to be underwritten like individual equities? If that's the case, we're going to see tremendous difficulty in attracting liquidity and growth and scale to this market, because every single project will trade like its own stock company. If we treat it as a commodity as originally designed, and we start to unify the processes, make the standards similar between the rating agencies, then we are going to see the rating agencies, the certifying companies as well, then we're going to see this market start to grow. So I caution participants when we see things, the popularity with adding co-benefits on Red Plus projects, while these things are attractive and they're great and they're useful for the communities, it's not necessarily the right place or the right tool to create a proper international instrument for trading and to be able to move the force and the power of capital markets. So that's an important piece to share with everybody. Same thing here. We're just commenting on the data, this slide here. And just going back to the example of what we're saying with the nuances with carbon credits. I'll use Vera as an example, and not to pick on them because they do a great job. But Vera projects, you can have that project added with co-benefits for community, climate, and biodiversity. So we're now adding a piece that differentiates a vintage. And then you can also determine whether or not any of those three categories deserves a gold tier on that. And so you might have a Vera project that also has the CCB on top of it. And then those CCBs might be single, double, or triple gold. You can imagine how much individuality this is creating for those projects and the difficulty that that makes for commoditizing carbon credits. Here's an example that we created. This is a project we've been working on for the last couple of years. We expect we're probably about 6 months out from being able to publish for free global pricing data. So one of the benefits to a firm like us, since we sit in the middle of the market, not only do we trade across the exchanges, but we trade across all the OTC desks as well. So that means that 95% of the market that is dark, we see those prices and trades all day long, in addition to the trades that are taking places on exchanges. So we have reference formulas that start to calculate where we see as traders proper fair market value. And we're going to start publishing that data for free. Nobody will need to subscribe to anything, pay any fees for that. They will be able to contribute data to it. And that will help bring prices into the light. One of the most important things for this market is transparency and access to data. Data should not cost money. It should be available for all participants. And as a final note, you know, the best part of this for everybody to feel positive about is that these markets are maturing. Just looking at the growth of these markets in the last 24 months is mind-blowing. So as participants like ourselves that have been in this market for 12 years, the power of the last 24 months has been greater than the last 10 years combined. And if that's any forecast for what we're going to see over the next 24 months, I think that we have tremendous hope to see capital markets and nature finally come into line, and we're going to see some amazing things happen together. Thank you guys for your time and the ability to present.
Thank you, David, for this excellent presentation, which I believe leaves us with a ton of lessons and at the same time, a ton of questions. And of course, precisely thinking a little bit about that, we do have some doubts and we have some questions that have reached us through the chat and through other means, through other media that we're streaming through. And some of those questions were answered by things you covered later on in your presentation. But I have a question for you, David. I'm going to start with you because I have you on screen right now.
Sure.
I will also ask Renato and Mariana, but I wanted to ask you about that thing about transparency and reliability, which are, of course, some of the biggest challenges that we have in Latin America and the Caribbean at the time of generating a more reliable offer. Which do you think are the short-term objectives of the region, or should have in the region, in order to cover these objectives for transparency and reliability?
I think that the first and easiest piece to tackle is publishing of reference prices. We should start there, and we should start as fast as possible. That will make a big difference, because when we talk to market participants every day, the information gap is large, and that information gap can be filled in very quickly. The second piece that is a longer, more complex market infrastructure issue is dealing with what we would call in markets clearing and settlement. And Renato and Mariana are very familiar with those mechanisms as well, being involved with B3. So clearing and settlement is a safe way for buyers and sellers to make sure that everybody is taken care of, that a buyer receives the credits, that the seller receives their money. And 95% of the market lacks that critical market infrastructure. So exchanges have that by design. Futures exchanges do an amazing job of dealing with that. The challenge is in the spot market. So the spot market really needs to address that, and that would improve confidence, and that would make the size for participation more accessible. So you could go to selling 10,000 credits at a time rather than 100,000 or 500,000, which are more common sizes for institutions that trade over the counter. I believe that those are the two things that are urgent to address. Price is easy. Settlement and clearing is a more complex market infrastructure issue that requires coordination between everybody.
Thank you so very much, David. I would like to ask Mariana and Renato two questions. One that came during the questions from people who have been watching this webinar, and it's about the blockchain technology. What type of technology are you using and under which formats? And the second question to ask you both something that we were talking about earlier about the new economic logic. Which do you understand to be the components of this new economic logic and where are we headed in that sense? Thank you. Renato, would you like to answer? Well, thank you for that question. At this time, we are very close to bringing into the market the token, which is in the blockchain. I'm looking for the name of the blockchain platform. I don't really have it at the top of my head, but maybe Mariana remembers. But what I really want to say is that we could go back to what David was telling us about the clearing. And then I'd like to go back to the blockchain. I would like to add something to what David was telling us. It is precisely for this reason that we are initiating our conversations with the stock exchange for the secondary market. In the OTC, which is for, we have registry, right? But as a commodity, as we have for soy or corn, there is a process for risk calculation and margins, and the stock exchange in this condition with a core party, which is the warrantor that for every buyer there will be a seller. With regards to blockchain, that is precisely the mirror of this participation in the regulated market. With this technology, we will include our tokens in a platform called Mundi Token. The name of the technology for blockchain is, it is, so sorry, NXT. And it is part, it is a communication using the POS, proof of stake system, indicated by the European Security and Market Authority. Perfect, thank you, Mariana. It is also closely Ethereum to that technology for the smart contracts. And as I was saying, it was announced in Lisboa during the Web Summit of this year. Web Summit, yes. And as I say, it is close to existence for everybody in the market. Very well. Thank you. Mariana, something to add? No, if not, please press on. Yes, okay. Um, I'm thinking, David, thinking a little bit about what you were saying about the need for deciding the logic of the market, whether we're talking about equities or commodities. We would like to hear your opinion in accordance with your experience in markets, which is the option that you would think might fly better?
Yeah, thank you for asking. I think that the first route, unquestionably for us, is a commodity format, is going to serve the markets better. But I want to take this conversation just a little bit further as well, because healthy markets, what's beautiful about healthy markets is that they are a reflection also of healthy nature. The dynamics are absolutely the same. You need this kind of biodiversity in markets to protect biodiversity in real life. So the parallels between these worlds are significant. In order to have success, it's not only the choice between choosing what is the better fit, equities or commodities, because there will be places for both. Carbon credits will function better as a commodity. Other instruments are going to function very well as equities. In addition to that, we want to also start thinking about the focus on carbon and whether or not carbon is the right focus. We would invite everybody to think about carbon as the last piece in the environmental chain, because carbon itself is an emissions issue. So 12 years ago, when carbon markets started, and even to this day, many large banks refer to it as an emissions market. That's actually very accurate. So we want to be careful. So having worked on Wall Street, one of the damages created by Wall Street was when Wall Street, as it often does, rushes into new asset classes and designs an instrument that's popular for investors, but is not designed to fit for the asset class. And this is what happened in 2008 with the US mortgage market crisis. Wall Street was creating popular instruments, but those instruments were misdesigned for the asset class. It's like a custom suit. You want the instrument to fit the objective. So I'm going to give you guys an example because I think this is where there's enormous, enormous opportunity. When we look at REDD+ projects right now, REDD+ projects, we're seeing governments around the world take the path of threatening the forest first so that they can then preserve it through a carbon project. That's not logical. All of us in this space today, we know that that's awkward. Now, if that's our only choice, and that's what we have to do to protect the Amazon, well, we would agree that's better than nothing. But if we really want these markets to move, we need to get the instruments right. So as an example, we have a lot of excitement and belief that some of the new models for biodiversity credits, we need to be designing very carefully and intelligently conservation-based credits. These are logical instruments that are going to be designed well and can last for decades. So I invite everybody in the community to have open dialogue where project developers are going to be the experts with working with nature. We can give the capital markets view, but we need to work together as a community to align the instrumental design with the objective. And so that's, kind of a furtherance of that equity commodity decision. It goes even deeper than that when you get into the details.
Super interesting, David, for sure. We could have yet another webinar specifically on that topic alone. And
Anytime.
Renato, Mariana. Yes, and Renato, Mariana, finally, I wanted to ask you a little bit about your views on the role of the government in the volunteer carbon market. What considerations do you have about the regulations? Do you think they can be stimulating or can they further undermine trade? For me, it is very important that the government reflect their regulation or to design the regulations in accordance to the realities in each country. because each country has some specificities. For instance, in Canada and in some countries in Europe, though the realities are totally different as to the Latin American countries. We have in large part, we have conservation. So we must always think in a manner that will bring benefits for us because realities are totally different. I believe that I believe that if we create regulations that benefit us, I believe that it will work very well. And I can perhaps add a little bit to what Mariana has said by telling you that in Brazil, specifically back in 2021, there was a decree, a presidential decree, which has regulated the emission of these green CPRs. But before that, in 2020, there was a law that put the preservation of biodiversity as an economic activity. Because if we don't have that regulation, we can still not monetize it. So back in 2020, I don't remember the number of the law, but with that law, they also issued a code which is to be included in accounting books as tax obligations that can be compensated through that economic activity. Very well. Thank you very much, Renato, Mariana, David. Most definitely, we have had a masterclass with great depth and with many aspects that leave us with a great deal of lessons learned and, of course, a lot of questions. Definitely, we have a plenty of challenges, but in this region, we also have enormous opportunities. And that is why we continue to work hard from the CAF and from ILAC for this specific purpose. And we will be counting on you along our pathway in this work that will continue over the next few months and hopefully a few years. I would also like to thank very specifically all of those who have connected, joined us, followed us. And I would like you to know that this webinar will be posted on the CAF website and you may take a peek at it, not only this one, but also the two previous ones. And we will soon tell you about our fourth webinar, which will be held before the end of the year. So from the CAF and the Initiative of Latin America and the Caribbean for Carbon Markets, I want to express my profound gratitude for your attention. We will be in touch through our means of communication. Good afternoon to everyone. Thank you all. Thank you all.